This conference will now be recorded.
Good morning, everyone. This is Tom Flynn. We're starting the meeting of the Connecticut Green Bank Audit and Compliance Government Committee to review the results of the recently completed audit. Before we get started, a few announcements just for protocol for the meeting. Number one, would everyone please make sure they mute their microphone so that we limit any background noise? Number two, there's a chat box functionality, I guess, on this. Mr. Farn, I'm going to ask that you kind of help me manage that chat box. If anybody feels they're not being recognized or being heard, please raise your hand and ask your question in the chat box and we will recognize you. We are recording this meeting under Executive Order 7B, the suspension of in-person open meeting requirements. And the meeting will be posted. Mr. Farnan, do you know what date that meeting will be posted?
We will post within usually within 5 days. We'll get these posted.
Great. And then whoever's going to speak, we would just ask that because this is being recorded and because many people don't have their cameras on, we would ask that you just state your name so that we have a firm record of who said what. Before I get started, are there any questions on the protocols for the meeting? Seeing or hearing none, we'll go to agenda item number 2. Are there any public comments regarding this meeting? Seeing none, we'll go to resolution number 1. I'm going to ask for the approval of the meeting minutes for May 17th, 2022 of this committee. Can I have a motion to accept, please? Don't everybody put their hands up at once. Can somebody move the minutes, please?
So moved. It's Lonnie.
Thank you, Lonnie. Do I have a second for that? I guess I'll second it. All in favor? Aye.
Aye.
Opposed? Abstentions? There are none? Okay. Mr. Farna, I guess we should question whether we have a quorum for this meeting, do we?
Yeah, I didn't want to interrupt you. I was going to ask that next question. So I know we have Tom and Lonnie. Who else? Do we have any other board members on the call?
I don't see or know of any. So, Mr. Farnham, what's your recommendation here?
I would suggest that we go forward with the meeting without quorum, with the understanding that we will not be making any, will not be having any resolutions, and we should go through, and then hopefully someone will join in at some time. But I would say we still continue to move forward. We could still record, although the open meeting laws do not technically apply. I think we should just continue to do that.
Sure. And that would mean that our approval of the minutes that we just did, because we don't have a quorum, will not stand. So we'll have to redo that at a certain point. Yep.
Yep. And then one last, hey, Cheryl, is there any of the members that we invited that you could potentially ping real quick? I know this is. Or is there anyone who RSVP is not here that if you're aware of? If not, we could double check. My screen is kind of frozen because I'm using it to present the meetings, or I would kind of track that down.
I can't. I don't know.
Okay. Oh, there's Cheryl.
I'm sorry, Brian. This is Cheryl. Did you ask a question?
Yeah, Cheryl. I was wondering if there were any. We have Lonnie and we have Tom. Were there any other ACG members that were invited that did respond? And if they did respond affirmatively, could you ping them or maybe give us a quick update so maybe we can solve that real quickly?
I haven't heard from Matt Ranelli, who's on the committee, and Matthew Dayton no longer sits on the committee because he's no longer in the role as a member through OPM. there's a new new member that's taken over Matthew's spot, and I don't think she has been assigned to this committee yet. So let me try to reach Matt Rinelli and see if I can get him to join. Okay.
Okay. And then an OPM member, I think what we should try to envision that as moving forward is that the designee, the appointment will stay with the designee. So if it's OPM and there's a transition, that follow-on person should still be considered the ACG member. We'll just do that moving forward.
Okay. I'll
So
try to contact Matt and see if I can get him.
Yeah. All right. Thank you. And then we'll add the OPM member for all other invites if they were somehow excluded. But okay. All right. Thank you, Cheryl.
No problem.
All right. If it's okay with you, Tom and Lonnie, I would suggest we, maybe we go through the annual comprehensive financial report. And even if we can't have a formal approval, we can at least solicit and obtain your feedback. I don't believe there were any red flags or substantive concerns, but it's better for you to hear that from the auditors, not from me.
Couple questions before we move forward, Brian. Given that the committee is now only officially 3 people, do Lonnie and I represent a quorum for the committee?
No, you have to have 3 members in attendance, 3 voting members.
Okay, even though the committee is now just 3 people, given we don't have that 4th member. Got it. And Mr. Senafani, welcome. It's good to see you again. And you failed to sell out the room. So, hopefully in the future we can get some of these sellouts going. So round up some new attendees. So I'm going to turn it over to you, as I think, or who am I turning this over to for the proposed draft comprehensive report?
I'll just quickly introduce Joe Centofanti, who is our auditor this year. We did change as required after the 6th year of having the same audit firm, and PCAF O'Connor Davies was selected via an RFP process. And Joe and his team went through the audit for us this year, and he will present for us today. Thanks.
Just to say thank you, Jane, and to the team from O'Connor Davies, Mr. Senfani, welcome. Just as a full disclosure, though I was not at all involved in the RFP process or anything like that, I do have a pre-existing relationship with Mr. Senfani for many years in O'Connor Davies as they audit the town of Fairfield, where I am an elected official. So I've known him quite well. And the quality of their work. So we look forward to working with you in the future years. Thanks for all the hard work and effort that went to both our ethics team as well as the audit from to this point today. And welcome. Joe, I don't think we can hear you. Oh, I can't hear him. Can anybody else hear him?
Not yet. No, Tom.
See your microphone is green, Joe. It's just not picking up any sound. You've never sounded better. Yeah, got nothing.
All right. Oh, and I am too excited to announce Matt Rinelli will be joining, so we should be able to obtain that quorum momentarily, and then maybe we can even do the vote quickly on the minutes. But let's maybe focus on the ACG audit report.
Okay, is that working now?
It's better, yeah. Welcome, Joe and team.
All right, thank you. Okay, so we're going to walk through a few reports. The agenda is on the second page, where we're going to talk about the annual comprehensive financial report, the audit, and then the single audit. Then we'll talk about our required communications, so those charged with governance, recommendation, and then future considerations. So on page 3 in the slides, we can advance that. The notable new items in the 2022 ACFR is there's 2 new entities that are reported: Green Liberty Notes LLC and CGB CPACE LLC. They're on pages 32 to 36, the combining primary government schedule that are in the footnotes. You'll see those 2 new entities. Also, this was implementation of the GASB 87 for leases. It was postponed a year, so it was effective this year. So you'll see some new footnotes, policy disclosures, and then a separate disclosure for your lessor activities and lessee activities. So the receivables and then the liabilities related to your leases. And then this year there's also a new independent auditor's report format. So it now leads with the opinion, which used to kind of be the last paragraph. So the format is just different. It kind of says the same thing. It just tells you right up front what the opinion on the financials were first. And next page, so speaking of that, the opinion on the financials was an unmodified opinion on the financial statements, which is the type of opinion that you are looking to get. The other section headings in the auditor's report show our level of responsibility. So for the required supplementary information, we have limited responsibility. And then the other information in the reports, introductory and statistical section, we have no responsibility for the information in those sections. So looking at the MD&A, the next slide, runs pages 11 through 20. So this is a good executive summary of the financial highlights and discussions of changes that compare to the prior 2 years in your case, which you have comparative statements. So a couple of the financial highlights is a total net position increased to 21.6 million, increased 21.6 million to 111.1 million. The change in net position from a revenue standpoint, which is going towards that 21.6, the operating revenues increased by 4.8 million to 60.7 million. Most of that was the primary government. Green Bank was about 5 million, and the component units and eliminations reduced it down to the 4.8 million. So the drivers for that revenue, the next slide, the drivers for that basically were increase in the RGGI auction sales of about 5.1 million, and an increase in the energy credit sales of 0.8 million. And that was offset by some small decreases in interest income and energy sales to get to the $4.8 million increase. On the expense side, there's a significant decrease in provision for loan losses of 3.8 million. And that, previously the loan loss due to COVID was increased, being conservative. And basically over the last couple of years, luckily the impact of COVID didn't have an impact on the payments, so that didn't materialize. So that was reversed in the fiscal 2022. There was a decrease in general administration expenses of 0.7 million and an increase in program administration costs of 2.1 million. All right, next.
Joe, can we stop there for a second and ask if any board members have any questions so far? Questions so far from any board members? Hearing and seeing none, I'm going to go back. Can you go back one page, Brian? If you don't mind. So, okay, I understand the revenue items. The decrease in provisions that we had discussed this previously due to COVID. I guess with the economy kind of slowing down, we're probably going to see an uptick of this in the future, I would assume, Jane, or are you guys looking at that right now?
Yeah, the main release that we did have was these COVID reserves that we had put up a couple of years ago, and we didn't see anything materializing that would lead us to believe that we need those. However, we do look at the loan loss reserves in detail annually, and if we have anything come to our attention over the course of the fiscal year, we will also put something up as well. But these were the old ones that we never saw anything materialize, and we'll keep an eye on everything and then do the deep dive at year end. So we still have plenty of reserves on the books. It's just these extra ones are no longer needed.
Yeah, I would just be careful as we head into kind of this new phase of economic activity here over the next number of months. For the decrease in general and admin expenses of 0.7 versus the increase in program of 2.1, was this kind of a reclassification item, or was this truly a reduction in expenses on one side and an increase in another? And on top of that, is the increase driven mostly by personnel costs or what, if I might ask?
I would have to say that they are independent of each other, and the increase in the program administration expense probably has to do mostly with the fact of the meter replacement costs that we've been doing. We had a few of them last fiscal year, and we have quite a few this year, and we'll have a few more leaking into next year as well. The G&A expenses is we had releases come through on both of our OPEBs and pension reserves this year, which are driving most of that.
What are releases? Just define that for me, if you wouldn't mind, Jane.
The reserve releases for when they do the actuarial valuations of what the liabilities are supposed to be, and they do the allocations of that reserve to each of the quasis. This year, it did result in a decrease for us. Let me see if I can find that exact number in the financials. No, I have to go to a different set, but I know both of them were to the tune of approximately $1 million release, and it was really just the valuations and allocations this year from the actuaries.
Whether that was mostly driven by valuations or was that driven by allocations?
Mostly by valuations.
Yeah, so this year with the stock market tanking, we could be in for a hit. I'm just trying to, I don't want to get too excited or too upset over things we can't control, but at the town level, we used to have this thing called 5-year smoothing. I don't know if they do that at this level, or this kind of ebbs and flows directly with the returns from the stock market and the like.
And well, the other thing that may play into it is if there's excess funds, and they can do another payment to fund the reserve as well.
Mm-hmm.
So just to add to that, just realize the state, the SERS and the MERS and teachers and SERS in your case, it's a year behind. So they're measuring it at 21. So the market was up at 21. So yeah, you're going to see this go the other way for sure next year.
That's what my concern was, Joe. Yeah. Do they do the 5-year smoothing, do you know, or do they take it all? You know what I mean?
They do that kind of the smoothing of the gains and losses. So, but you'll definitely see a hit next year. Your expense will go up instead of down. So it'll take it back for next June for sure.
Yeah. Thank you so much, both of you. Are there any board members that have any additional questions or follow-up questions on this discussion?
Tom, this is Matt. Sorry to be late.
Hey, Matt.
Just a quick question, maybe in one sentence, so because everyone else probably already heard it. But why did our net position increase from 21 million to 111 million? Seems like a big change.
Well,
Was there something we did different in accounting, or is that a real change in net position, or just we moved something around?
Well, that was, let's see.
I think hey, Matt, it
Yeah.
increased by 21 million, not from
Oh.
21 million to 111.
Okay. Yeah, got it.
That's
Okay.
still, I mean, it's still like a 20%,
Yeah.
20% increase or whatever. So it's still valid question. I just wanted to put it in.
Yep.
Yeah, I think some of it relates to the unrestricted piece, the change. So that, operationally, the increase was 12.7. So I think that statement was relating to the unrestricted.
Okay, so funds that were restricted were no longer restricted.
All right, let me see. Let's see. And that. Well, that's the total net position increase, that amount. I'm looking at the right, looking at the wrong one.
I wanted to see if I could bring this back by legal entity. I know approximately every year we get 3 to 3.5 million dropping through to the net position from the Shrek ABS bond that we have, even though the cash for that is pretty much all restricted. Because of the income does drop through to the bottom line. So every year we'll see about 3 to 3.5 million for that. I know that one off the top of my head. I'll have to look back to find what drives what's driving the other legal entities. Some of that also could be our reserve release that we did for the loan losses as well.
Right, that was definitely a component of that, because revenues were 60.1 million, expenditures were 35.8, and again that 3.8 was a factor in reducing the expenses, revenue being up, the $5 million was the other.
Yeah,
factor.
and CGB itself for the Green Bank standalone had revenues of 48 million and expenses of 33. So they did drop some net position to the bottom line as well as the reserve releases there.
Yeah, for comparison, last year was 12.8 was the increase. So, and the year before was 8.9. So that's kind of your 3-year trend. If you're looking at the MD&A on page 16, you can see those numbers. So that this year, I think it was the increased revenue and the reduction in the reserve is kind of basically the two big factors, and the increase over what your average increase has been the last couple of years.
Thank you, Matt. Any follow-up on that?
No, thank you.
Any other board member? Thanks so much. You can go ahead. I appreciate it, Joe.
All right, sure. And the last slide on the financials is just a revenue history. I just put that in, just the one before that, just so you see your trend in your increase in revenues for the past 5 years. So there was a dip in 19, but then since then you've had consistent increases in your revenues, which is driving that increase in that position that we just talked about. All right, I'm going to turn over to Catherine to talk about the last several slides.
All right, so I'm going to talk about your federal, Catherine Patna,
welcome.
Senior Manager. I'm going to talk about the federal single audit that you had this year. We showed an unmodified opinion on compliance on pages 3 through 5 of the federal single audit report. The schedule of federal money spent can be found on page 6. There are 2 programs reported there. We tested one of those programs, the ARA State Energy Program, on which you spent 1.2 million, and we had no findings or question costs on that testing. The next is the required communications with those charged with governance. Significant estimates in the financial statements include on the net pension and OPEB liabilities, the allowance for uncollectible accounts, and the asset retirement obligation. We found that your disclosures are neutral, consistent, and clear. We'll be requesting management representations. We had no material uncorrected misstatements, and we did have 2 past adjustments that you'll receive in your communications. The first one was relating to the R revenue. When the R revenue was originally received, it should have been recorded as unearned revenue until it was spent. However, the decision was made to record the revenue when it was received before any of the current management was in place. So the net impact after current year activity on the financial statements would have been $575,000. And the second past adjustment is on deferred financing fees, which were recorded for FASB reporting purposes, but should be removed for GASB reporting, although this was not material to our financial statements. And the last item is the one recommendation.
Before we go on,
Mhm.
Catherine, before we go on, does anybody have any questions on the past adjustments? On the first one where you said current management wasn't in place, talk to us a little bit about that adjustment a little bit, just so we understand what it is.
Sure. The R revenue, which was received, I believe, in 2012 or thereabouts, when a government receives revenue, it should be recorded as unearned until it's spent. When they receive grant revenue. But the decision had been made to just record it as revenue when it was received. So really, when we came in, there should have been some revenue that was reported as unearned, and then revenue recorded in the current year for the 1.2 million that was spent on the grant. But it had all been reported as received.
How did you guys actually find that in your testing very quickly? Because that goes back a very long way.
When we were testing the expenditures, we were looking for where the revenue was, and it wasn't in the financial statements. So we asked management what had happened with that.
Okay. So it was recognized all up front 10 years ago and should have been amortized over the period of service to properly match that revenue with the expenses that you found in our financial statements. Is that fair to say? Yeah.
Yep.
Do we have any other questions on that?
Yeah, it's Matt. I'm just kind of curious about that too. Like some of that we used for projects. Some, my recollection is we figured out we could put it in sort of a revolving fund. So I'm just curious, like, it sounds like the way we did it wouldn't have benefited us. It would have been putting it on the books too early instead of too late. And B, how would that work if you're saying it's only funds in the year it's expended, if it's sort of expended as a revolving loan or revolving program?
They were used for interest rate buy downs, which is how it's recorded on the schedule of expenditures of federal awards. So that's how it would have been recognized as revenue as the expenditures were reported on the CFA.
Okay, I thought we used a portion of it for a program where we used it as part of a loan program. Okay, that's fine.
So we had used it previously in loan loss reserves, where the money was just sitting there, and then we transitioned away from that and started using it for interest rate buy downs.
I thought, yeah. So didn't we, for the last, we figured we could use it in a program, or maybe that was I thought we were getting a payback on it. Yeah, but never mind. I don't want to.
So yeah, can I speak a little bit just quickly to Eric's point? If you can hear me, it's Bert Hunter, Chief Investment Officer.
Sure.
So we used several $1 million of those funds for, as Eric points out, loan loss reserves. So they were utilized, but they were not fully expended, meaning they were not consumed. So they were merely transferred from cash in one account to a purpose, cash in one account being held for use, then subsequently to a loss reserve, which sometimes required us to put funds in particular accounts. Jane will know this because, for example, in Solar Lease 2, we used 3.5 million of the ERA funds to support the Solar Lease 2 program. But then we subsequently, because those funds weren't being utilized, we decided to replace those funds with Green Bank pure cash that was not ERA related. So then we were able to then use, for example, that 3.5 million for interest rate buy downs. And in that process, the actual funds were consumed, meaning, you know, brought down over time and actually sent out the door forever. Whereas that's not the case in a loan loss reserve. It's not consumed unless you have a loan loss to apply it against.
Bert, what it sounds like was what I'm hearing, and everyone tell me if I'm wrong, is that when these, when it was originally set up and originally accounted for, it was accounted for with the expectation of the way it would be utilized. And over time, that utilization changed, which made the rest of the accounting for it, predating it, inappropriate, for lack of a better word. And I don't mean that anybody did anything nefarious. It's just because the utilization changed. It sounds like the accounting probably should have been changed at that point in time in the past, something like that. Does that make sense?
I don't know, Tom, if it does. I'll let Bert answer. But my recollection also was, and again, it's a long time ago, was that the ERA funds, when they first were released, they had to be, you know, it was all this shovel-ready stuff. So they had to be dedicated within a certain time period. And I think we then realized we could use it in a different way, and that's when we switched it. But I thought that we were required to dedicate those funds to something, and that's why we set them up the way we did initially. But I mean, it's not a big deal because it doesn't sound like there's a material change here, but I just, you know, want it to be accurate if it's something we should look at. But I thought the original ERA rules required the money to be, you know, dedicated to something within a certain time period. I think it was a year.
There was no such requirement under that I can recall, Matt, under the agreement we entered into with DEEP. There might have been something between DEEP and the DOE, but I don't think so. And by nature of the fact that you could use those funds properly as a loan loss reserve, you know, those funds could go on literally for 20 years and not be used, not be consumed, as I mentioned. Dedicated, yes, but not consumed.
Got it.
Okay.
All right. We can move along. It's immaterial. I'm good catch on your guys' part, and you know, thanks for bringing it to our attention.
The next item is our one recommendation that we recommend that the approval of all non-standard journal entries be formally documented to strengthen internal controls and ensure compliance with the Green Bank's policy and procedures.
Okay. Quick question for you guys. These are the formal things that you found. Was there any more informal observations? You know, first year audit, you've been in there brand new. Jane and her team have done you know, from our perspective, have done a great job. So this isn't about, you know, that. It's about, you know, do we need help in certain areas? Do we need to address certain things as we go forward? Or are there things that aren't formal issues right now, you know, other than new principles coming out and the adoption of new principles and the like, but just, hey, you guys should be aware of this as we move forward.
Yeah, I don't think there was too much of that. I mean, there's a couple things that probably we just, you know, in looking at it for the first time, maybe, you know, looked at, maybe revisit something or to take a look at some of the details, like the asset retirement obligations, one area that, so maybe, you know, some of the data that those calculations were based on are a few years old, just to kind of revisit something like that and make sure it makes sense and that you're factoring in things such as, the customers that are keeping the equipment versus what you would have to, do that. So just kind of just getting a little bit more refreshing some data and some calculations, but there was nothing else really significant. Prepared the whole report, had backup and schedules and support for everything, and definitely Jane and Dan were very responsive to everything that we looked at. So a couple different things. When we looked at compensated absences, we kind of looked forward a little bit, and as far as there's a new standard coming in that Catherine will talk about. Just kind of looking forward to kind of set up to be ready for that. It's not a material number at all, but just to so that was another example of something that came up, just saying the new standard is going to look like this, so we should probably start adjusting the calculation to look like that, even though it's an immaterial calculation.
Jane and Dan, you just finished. First of all, thanks for all the efforts to you and the team. You guys just finished going through a first-year audit, new audit firm, which, having done those myself, I know how challenging those can be because they're deeper dives than in normal audits. So I want to give you the opportunity to comment on, did you guys learn anything in this audit process that tells you that you need some, I don't want to say additional help, I don't want to put any words in your mouth, but hey, these are areas that are challenges for us that you guys should be aware of as board members, or these are things that we can do a better job at?
This is Jane. Funny you should say that, Tom, because we just did hire a new staff member who started on September 30th, and we're going to reorganize a little bit of the workload so that we can get a more concentrated review and move everything for the CPACE accounting to this one individual. So it'll reside with one person who's seeing all the aspects of it rather than with two or sometimes three. So that will help. But with respect to a first year of an audit, it's funny to see the things that get focused on that you have been looking at for years, that all of a sudden the fresh eyes, you're like, oh, yeah, maybe we really should be breaking that particular item out for disclosure. So for me, it was really helpful having a fresh set of eyes to just dive into things in the financials that you just don't even look at them anymore because they're running very well. So that definitely helped for us. And the comment with the journal entry approvals of non-standard is definitely something that we've been working on. With COVID and the way we always did things pretty much with paper, you can't really do that now. And we're implementing a new system, Flowcast, where it does allow us to attach all the backup and to indicate approvals, but we're probably about 90% of the way there, and now having a new team member will be able to deal out those appropriately so that there is a better segregation of duties for that.
Matt, did you have any follow-up questions, or Dan, do you have anything? I want to give you a short shift answer. Do you have anything you want to add?
Nothing from me, Matt.
Thanks, Matt.
Other than good job, Jane and her team.
Thank you.
Okay. Catherine, anything that you want to add to what you saw? Because, we know you did the work, so.
No, I think Joe said it all. But yeah, I agree. Jane and Dan were very helpful, very responsive, which was great.
Yeah, Dan's actually saying he has nothing additional to add. He's actually sitting at a software conference for our general ledger right now.
Oh, thanks for that. Okay. Then I'll turn it back over to the audit team to walk us through the next new pronouncements and stuff.
Yep. So the last thing we just wanted to talk about was a couple of the new pronouncements. GASB 96 subscription-based information technology arrangements will be effective for next year. We'll take a look at the IT contracts. We're not expecting any significant effect. GASB 99 Omnibus. The one item that's relevant is derivatives for 2024. There may be some slight changes in reporting. You do have one derivative instrument, the interest rate swap. So we'll be taking a look at that when it's effective. And there's also the LIBOR rate replacement. And then GASB 101 compensated absences, like Joe mentioned, we were discussing with management this year. That statement just updates recognition and measurement guidance for compensated absences, and we don't expect any significant changes to your financial statements.
Okay, what is the subscription-based information technology arrangements? Can you give me the brief blurb on what's changing there?
So it's similar to the lease standard that was implemented this year, but for IT contracts such as your accounting software. So we'll take a look at that and see if that needs to be recorded as a liability, like we recorded your office space leases as a liability this year.
Got it. Okay. Any other questions from board members on these items? Seeing none. Anything else from the auditors? I didn't mean to cut you off if I did.
That's it for me.
Thanks, guys.
Sure.
Can we go to the next slide? All right. Any board members, any members of the public, any Green Bank, I don't know, Brian or Bert, if you have anything to say on these items?
No, I mean, I always just feel like it's interesting when you have a new auditor come in. Well, I think the Green Bank's business is probably very different from your typical governmental entities. So if any of the auditors, and it's, had anything to opine on that, we'd always love your insight, from a 40,000-foot level, because I know, the work that Jane and her team does is so unique, I think, in the governmental world.
Yep. Anybody else?
I'll just add that. Sorry, go ahead.
No, go ahead.
I was just going to add that along with the financials, we have our non-financial statistics or our detailed annual impact report is attached to this, which has had its audit, its tires kicked, we should say, by Kestrel verifiers, and their letter is accompanying that report.
Great. Thank you, Eric. All right, so I'm going to, first of all, Brian, I noted that Lonnie, there was a note that popped up that said Lonnie signed off. I know she was heading up to your office. Do you know whether we have Lonnie back on or not? Because if not, we don't have a quorum again.
Let me check. I thought she might have joined by phone. Lonnie, are you on? Let me go see if I can. Hold on, maybe I'll call her real quick.
Tom, while Brian's doing that, again, I don't know if I missed it, but I know for a while we were supposed to let everyone know that if they have questions or issues they want to discuss with the auditors offline, then they should contact them at those numbers. I'm sure someone pointed that out earlier, but just to be
No,
complete.
actually, I did not. So thank you very much. I appreciate you doing that. Rookie mistake on my part, Matt. It's good to have the experience here. So we'll just wait and see if Lonnie's coming on. What we have are the minutes and then this resolution. And then we have some slides to go through. So I'm going to hold off on this. I want to be cognizant of everybody's time. And we've got about 15 minutes left that was blocked aside. So why don't we go on to the next items, and then should Lonnie rejoin or we're able to track her down, we'll come back to this voting item. So Agenda item number 5 is the impact methodology updates. Who am I turning it over to on this one?
It's me, Mr. Flynn, Eric Trago, Vice
Eric,
President of
please.
Operations. Okay.
Thanks,
So,
Eric, and feel free to call me Tom, by the way.
all right, thank you. For the impact methodologies, as the committee and board are well aware, we come before you from time to time to seek approval for the methodologies we use to assess our impact. We have had outstanding methodologies for job creation and tax generation. So for each $1 million that's invested in solar or in residential solar, how many jobs are created? What's the taxes that are generated off of that? So we've had, this goes back to 2008, where DCD and our predecessor over at CI worked on a study about clean energy and job creation. That was adapted and updated throughout the years. We put in place a methodology in 2016 that we've been using for impact. We updated that in 2020 when we commissioned a study about taxes. We engaged with Guidehouse, who's the successor of Navigant, who did the original study, to update this as we're headed into the launch of battery storage. And just with everything else going on, we wanted to make sure that what we were doing represented the present market. So Guidehouse, about a year ago, kicked this off. They updated technologies that were included to reflect kind of what we had done and what we were going to be doing. So anaerobic digestion, CHP, and meter replacement were technologies that had not been considered by the original study, despite us having done a fair amount of activity there. We also wanted them to kick the tires on battery storage, recognizing that we had included batteries in previous studies, but lots had changed from a technology perspective and workforce perspective. So they issued a refresh survey. They worked with DECD to update job multiplier numbers. They've sized up the industry, and they've perfected the study. It's the same methodology that's been approved, just with refreshed inputs, shall we say. The one tweak that we have on here is in the tax methodology. Previously, we were only looking at personal and corporate income tax generation, as well as sales and use tax generation estimates. We've now updated that to include property tax. There are a lot of exemptions for property taxes, but this is mainly looking at items not around distributed generation, but more around efficiency and how much those are increasing property values and what the potential or hypothetical increase in property taxes associated with those. And it's a very straightforward calculation of just the value of that equipment multiplied by the town's mill rate. So I'm joined by Jen Castor from Guidehouse, and I'd be remiss if I didn't thank Jen for the immense amount of hard work that went into this in terms of chasing down people in industry, conducting interviews, and helping us size up corporate overhead. Yeah, I'm just bringing before the committee the updated methodologies. You should have seen some much more colorful PowerPoint decks in the mailing than I'm giving you today, but that's basically the item. And being that we don't have a quorum, I won't look to move the resolution, but.
And what was the, I actually don't even see the resolution on here, to be honest with you. I see.
It should have been on the resolution doc. I don't think I got it onto the slide.
Okay. All right. That's I was just going off the slides right now.
And we could always, Eric, if you want to read the resolved clauses too, we could always potentially do that if we get quorum back, if members want to take it up.
Sure. We'll do.
Okay. If it's okay, Tom, maybe we'll continue through the agenda without Lonnie to just give some of the other updates.
Go for it, Brian. It's the governance review, so this is you.
Okay, perfect. So this is a pretty straightforward report out. last year with our expansion into environmental infrastructure, we did a pretty substantive material review of all of our governance documents. You can see them listed below on the slide. This year, obviously, there's no major change or structural change, or some of these cleanups often occur also when you're doing a bigger review, and that really happened last year. So there are no recommended changes to our governance documents for this year. So that's all I would have to report out there, but I would entertain any questions before we move forward.
Any questions from board members? Matt, anything?
No, nothing from me.
Seeing none, anybody else? Okay, go right ahead, Brian.
Perfect. And then we have our reporting requirements. Reporting requirements are the previous person that was handling that has transitioned out of that role. I'd be happy to speak about that offline or in executive session, just because that revolves around HR issues. But I am happy to say that, with the hard work of the team, Jane, Eric, and others, all of our reporting requirements continue to stay, to be filed on time. And then for a membership and board perspective, obviously we're still, at some point we will lose Matt, but right now there are no members that are currently otherwise being looked to be appointed to or in need of appointments. So excited about that. And our compliance memo for fiscal year 2022 is out, and I'm happy to report no members were out of compliance during this time period.
We're not letting Matt go, by the way, but anything else?
No, that's all I have, and I agree with that.
Hey, Brian, one thing that comes to mind, though, in all seriousness, and I want to make sure we do this in the absolute appropriate legal way, obviously, but I think it would be important for this board to maybe meet in executive session at some point and just get an update on anything that's going on that we should keep in that area.
Mhm.
So can you put something together like that and say what those, generally what those items might be? And let's get something on a mutually convenient date and do that, just so that we're fulfilling our obligation to be completely informed of anything going on. Can you make that happen?
Yes, I could do that.
Thank you, sir. Much appreciated. Has Lonnie been able to join back? Because we're at the kind of the end of our hour here in a couple of minutes, and I think we're at the end of our agenda.
Can you hear me?
Oh, perfect. Thanks, Lonnie. Yes, we can.
Yeah, and I've been here quite a while, but for some reason you weren't able to hear me. But I've been here for most of the meeting.
Oh, great. Thank you so much. Let's go back. I'm going to ask. I'm going to read the items that we need to approve that I'm aware of, and Brian and Eric, if you have more that aren't on the slides, please bring them up as we go through this. But on the slides, at least, I have two voting items that I want to get out of the way. The first one, we already moved, Matt, without you here, which is the meeting minutes, the approval of the meeting minutes on May 17th, 2022. Lonnie moved them, I seconded, and I'm going to call for a vote to approve those, if you will. So all in favor of approving those meeting minutes for May 17th, 2022? Aye.
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 Matt? Okay, so those are moved. Thank you. We'll move to the next item that I had is resolution number 2. This is on slide 18. And this is resolved that the Audit, Compliance, and Governance Committee hereby recommends to the Board of Directors for approval the proposed draft annual comprehensive financial report for the fiscal year ending June 30th, 2022. Can I have someone move that item, please?
This is Matt, so moved.
Okay, and Lonnie, do I have a second?
You do, definitely.
Great. So all in favor of this item? Aye.
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 Okay, no abstentions, no no nays. So I'll turn it back over to Brian and Eric. Do you have, I don't see other items on here for voting, but I think you said that there are.
There's the other one would just be the methodology that Eric presented on. Eric's going to pull it up. I could try to dig it up if you want me to, or he can read it. Hold on 1 second.
Oops, I have it. Just bear with me 1 second.
All right.
I'm waiting for my computer to unfreeze.
Technology.
Yes. You can see the start of it in the background. It says starts with resolved.
Oh, that's all we need then. No.
Yeah.
Maybe.
Sorry,
Oh, here it is. I resolved that resolved in the chat. Resolved that the Audit, Compliance, and Governance Committee hereby recommends to the Board of Directors for approval the proposed jobs study and tax calculator for the evaluation and measurement of the jobs created and tax revenue generated by Green Bank supported projects.
thank you, Brian.
My apologies, I was on mute. Thank you, Brian. Do I have a motion to move this item?
So moved. It's Lonnie.
Lonnie, thank you. Do I have a second, Matt?
Second, Matt.
All right. All in favor?
Aye.
Aye.
Aye. Opposed? None. Abstentions? None. So that's that. Thank you, gentlemen and lady. And do we have any other items before us? Any other items? Mr. Farnan, anything?
Nope, not at all. Thank you all for.
Yeah, thank you. Before we get off the phone, first of all, I want to thank our internal accounting group going through an audit and going through first year audit and doing it as well as you did. I know from firsthand experience is very difficult. It's a challenging item, and you guys obviously did it quite well. So kudos to you and thank you for all the hard work and effort. To our new audit partners there, we want to thank you for your efforts in working with our team. Please know you have an open line of communication with this committee. I've been very impressed in my involvement with this audit committee in terms of our openness and willing to work with the audit firms as well as the accounting team to make sure that we do what is appropriate to safeguard the people's money and to make sure that we report out in a transparent way. So please know that our door is always open to have conversations with you on those items. And we thank you for your efforts and look forward to working with you in the future. Before I leave, do any of my fellow board members have anything they'd like to add? Seeing none, can I call for a motion to adjourn?
Matt, so moved.
So moved.
Okay, all in favor?
Aye.
Aye. Take care, everybody. Have a good day. Thank you.
Thanks,
Thank you.
everybody.
Thank you, Lonnie. Thank you, Matt.
Thank you.